Good morning and welcome to our QuickBooks online workshop. Today we have myself, Chelsea, and my colleague Chanel taking you through some key areas of QuickBooks Online. Firstly, a bit about M&A partners. We have elite partner status with QuickBooks, and we also have certified advanced pro advisors within each of our office who can support with any of your queries. If you have any specific queries after this webinar, please get in contact with either me, Chanel, or your usual contact at M&A partners. So what's being covered today? We're going to run through credit notes, how to raise them and allocate them, bank imports and reconciliations and the importance of them, the mobile app, in particular the snap receipt function and raising sales invoices, receivables and payable reports and how to correct them if they're not quite right, and finally VAT returns, in particular the VAT rates available on QuickBooks. Firstly, let's take a look at credit notes. There are different ways to add a credit note into QuickBooks depending on the type of credit you have received or are giving. For example, if a payment is to be issued, this would be added differently to a credit that's being added to your account and applied against future invoices. We will cover the different types of credit notes and how they should be entered in this section. So let's look at credit notes from customers which are to be credited onto your account and offset against future payments. To add a customer credit note, you need to select the New button in the top left-hand corner, and then under Customers, you will see Credit Note. Once in the customer credit, you need to add your customer name. So I'm going to select Billy Bowl. You need to choose your date. Now this date can be amended to suit the date that you want to put on your credit note. So I'm going to backdate it and go for the 3rd of September. Next, you need to select the product or service, and that should be the same category as your original sales invoice. So I'm going to choose room hire. You can then put a description in there for what you want your credit note to say. So I want to say it's room hire credited for the 3rd of September. We'll say in this instance, the customer didn't use the room that day. Then you put the amount in. So I'm going to say £100 and the applicable VAT rate, which in this case is 20%. Then you can select save and send if you want a copy of the credit note to be sent to your client, or you can click save and close if you're going to send it in another way. To allocate the credit note against the sales invoice or multiple sales invoices, you need to go to the New button and then select Receive Payment. Then you need to find your customer again. So mine was Billy Bowl. And then it will bring up a list of the invoices that are outstanding. The credit note that I raised is a part payment, so it's only 120 and his original invoice was 360. So I'm marking the 120 credit note at the bottom here, and then I'm marking 120 of it against the 360 invoice. And then save and close that, and that's allocated that payment. If you have a credit note which is due to be paid back to your customer, so you're physically going to pay them the money back through the bank, you need to click New and then Expense. You'll then need to put your payee in there, so I'm going to use the same customer again just for ease. And then you need to put in your payment account which account you're paying the money back from. So I'm going to choose that I've paid in cash. Then you can select your date, so I'll leave it as the 3rd of September. And then you put in your category as debtors. In the description, you can put it as a credit. So I'll say credit for room hire. And then the amount again, I'm going to go with £100 and the VAT rate of 20%. And again, in the bottom right-hand corner, you can save and close that. Sorry, the debtors shouldn't have been debtors. It should have said room hire or sales, whichever category your QuickBooks has. So then save and close that. Alternatively, the refund can be added directly from the bank feed. If your company has a supplier credit note to be allocated against future invoices or to be refunded to them, the process is the same as what we've just done for the customer invoice, but instead you will use supplier credits. So under the new button, there's then supplier credit, or you'll use a bank deposit if you're actually going to pay them the money or receive the money back. Next, I'll hand over to Chanel for the bank imports and reconciliation.
Okay, so firstly, we're going to have a look at how to manually import your bank feed. So if you don't want to connect your bank feed, or your bank feed drops out for a period of time, you can manually import your bank transactions. So firstly, we go to transactions on the left-hand side, go to bank transactions, and then we can drop down from the top here to upload from file. Most banks give you the option to download a CSV file on your online banking, which you can simply drag and drop into the box provided. Before doing this, we'll just have a brief look at the CSV file itself. So we need to ensure that we delete any unnecessary columns and include the amounts in one column, ensuring income is a positive and expenses are negatives. Once the above is complete, we can simply save, ensuring it's a CSV file, and drag and drop per the previous slide. You will then be presented with this screen where we can drop down and select the relevant bank account. Click Continue. We will then be given the chance to confirm some final details, such as the date format. Most options are automatically filled in. You can then select all transactions and click Continue. And finally, say yes to the import. These transactions will now appear in the bank transactions section on your account. Now I'm going to talk through how to use the reconciliation tool on QuickBooks. You must ensure that all transactions in the banking screen have been processed before going to reconcile your account. Next, we go to Transactions and Reconcile, and then drop down to our selected bank. So this time we're going to do the HSBC account. Ensure you have your bank statements to hand, and then you can then enter your end balance and the statement end date. QuickBooks usually selects a few transactions here. So firstly, we're going to clear all of these down. And then it's just a case of matching your bank statement to the transaction on QuickBooks. So let's pretend we've done that now. And we've found that we've got two duplicates here. This could be to do with an issue with your bank feed, or when importing it, you might have accidentally duplicated some lines. So what we're going to do is click into these lines and edit. And then we can go ahead and delete these because we know that they're incorrect. You will also see I've got some transactions here without this green box, which means that they haven't been manually added from the bank feed, and perhaps I've mistakenly matched them to the bank when creating an expense. So what we're going to do here is firstly, I might have a look at my invoices and see that potentially I've paid these in cash. So what we're going to do is, again, we're going to edit these. But this time, there's no need to delete them. We're just going to change to cash. We can do that for the second one here. Okay, so now once I've gone through my bank statements and matched them all off, we can see that we've got a difference of 0, meaning the balance on QuickBooks matches our bank statement. We can now finish now. And this is something that's quite simple and easy to do each month, just to keep a track of your bank feeds. It's also very helpful for us when preparing your year-end accounts, knowing that the bank's already reconciled. Okay, back to you, Chelsea.
Okay, so now we're going to have a look at the QuickBooks mobile app. It's free to download and it has much the same functions as the online version of QuickBooks. In this section, we're going to briefly show you how to use the Snap Receipt function. The Snap Receipt function is a tool whereby you can take a photo of a receipt, for example, when you've gone and bought some fuel, and QuickBooks will extract as much information from it as it can to then create the expense and post it into the software. An added bonus is that it also stores the picture of the receipt against the expense in QuickBooks, so it's easy to find at a later stage if need be. We're also going to cover how to raise an invoice on the app. So when you log into the QuickBooks app, this is the first page you will see. And under these quick actions, you've got Snap Receipt here. So you choose that. And then you need to take a picture of your receipt. It will open your camera and you can take a picture of the receipt. You need to make sure that the picture you take is as clear as possible. Once you're happy that the picture of the receipt you've taken is clear, you can click Use this photo down the bottom here. And then the photo is uploaded into the software and put in for review. This is the stage at which QuickBooks starts to extract the information. Once extracted, you can then review the information, ensure that it's pulled the correct figures, the correct date, put it to the correct category, and you can input any missing information. An example of the missing information would be it might not pick up what bank account you paid it out of, or if you've paid it cash, you need to tell it you've paid it cash. The next screen will then allow you to create an expense from the receipt. As mentioned a little while ago, by taking a picture of the receipt, this will save a copy to the transaction so it's easier to find in future. So you can see here, we've got the expense. I went to the petrol station and it's got a picture of the receipt there. Next, we'll have a quick look at how to raise a sales invoice on the QuickBooks mobile app. So again, under the quick actions, you've got the invoice button. The next stage will be to fill in the information. This screen asks for the same information as if you were raising a sales invoice online. So it asks for the customer, the date, any payment terms that you've agreed with your customer, and then that will reflect in when the invoice is due. You can add your product or service, so sales, or if you're specifically charging for room hire or something like that, you can put that in the product or service bit. You've then got the subtotal, so you'd put your amount in here and you'd pick the correct tax rate. So this is one that's been filled in. So I've got my customer name, I've got the date, the payment terms I've agreed, the amount I'm charging £200 plus VAT. The next stage is that it will show you a preview of your sales invoice. This allows you to check that everything looks correct before you send it to your client. It will also show you a preview of the invoice should you want to print the invoice and pass it to your customer, or if you want to see what it will look like when it's attached to the email that sends out the invoice. From this screen, you can then, as I say, email it to your client, and then it goes off in exactly the same way that it would do on the online version, and it gets sent straight to your customer. Next, Chanel will go through the payables and receivables reports.
Okay, so your payables and receivables reports should be reviewed regularly to ensure they're correct. It's important to check these reports before your annual accounts are drafted to make sure amounts are included correctly. We will look at where to find these reports, what they mean, how to check them, and how to amend. Okay, so firstly, we'll look at the payables report. So we're going to go to reports on the left-hand side. And open up the accounts payable aging detail. So your aged payables, known as creditors, are amounts you currently owe to suppliers. So we're looking at the report as of today's date, but you're welcome to change that date, perhaps to your accounts year end, and run report. So already we can see we've got a couple of Tesco's and then Red Company. Now, with the Tesco's ones, again, we think we've paid these in cash. We've looked at our receipts and we can confirm that. So we need to amend these because they're not outstanding. So what we're going to do is we're going to click on the transaction. And then we can click Make Payment. And then we're going to update the payment date to the date actually paid. So we can see there that we added the bill and that's the date that we paid. And then we can simply save and close, which has now removed it from the report. And that's something we can do for the second one as well. Then when we look at Red Company, this is correct to be outstanding. So we can see here that the amount column here shows the total amount of the invoice. And then we've also got the open balance, which is the amount outstanding. So we can see that we've already paid £500, probably a deposit, and that amount is okay to be outstanding because I know that that's something that I've got to pay at the end of October. So in that case, we're going to keep that one there. So now if we go back to reports, and let's have a look at the amounts receivable aging detail. So your receivables, or your debtors, are amounts currently owed to you by customers. This report can be used to help with credit control checks, ensure customers have paid within the correct payment terms, and provide an overview of total amounts outstanding. Again, we're looking at the report of today's date. This can be altered if necessary. It looks like we've got two here. We've checked our records and we know that actually they're fine to be kept there and they are amounts due to us. Okay, pass you back to Chelsea, who's going to speak about VAT.
Okay, so in this final section, we will cover the VAT return, including the VAT rates and reports and how to file your return. It is important to make sure that you are using the correct VAT rates when entering your transactions on QuickBooks. Each VAT rate shows the transaction in a slightly different place on the VAT return, therefore it's important to get it right. So we start with the 20% VAT code. This is the standard VAT code that is used on most transactions. Next, we've got the 0% code. This code should be used where stated on the receipt or if there isn't VAT stated. For example, if you make a purchase from an unregistered individual or company, then this will appear in the VAT return as a purchase or a sale, but it will have no effect on your VAT liability because there's 0% VAT. Next, we've got the exempt VAT code. If you need to use the exempt code, it will be stated on the receipt. It usually applies to things like insurance and bank charges. When using this code, the transaction will still appear in your VAT return, but it will not affect your VAT liability. We've then got the no VAT code. These are transactions that will not appear in the VAT return at all. These are used for things such as drawings, your director's loan account, personal transfers, private expenses, wages, pensions, tax payments, things like that. Things that don't go on the VAT return at all. You've then got the 5% VAT code. This will be used for things like domestic gas, electricity, and if you need to use this code, it will always be stated on your invoice. Finally, we've got the 20% reverse charge code for CIS. This is very specific and is only really used in the construction industry. So if you think this applies to your business, please get in contact with us and we can provide you with our fact sheet. Next, let's have a look at the VAT reports in QuickBooks. So to view your VAT return, you need to select Taxes on the left-hand side, and then make sure you're in the VAT tab at the top. It usually defaults to the VAT tab, but if it doesn't, you can just click on it at the top here and it will bring it up. Making Tax Digital should be connected on everyone's QuickBooks accounts now, and therefore the correct VAT period will be pulled through directly from HMRC. If your MTD section isn't turned on, please let us know and we can forward you a fact sheet on how to enable that. At the top here, we can show the period of our next VAT return. The period that shows will be for the current period due, but as we're using a demo company, we have a historic period showing. All figures are automatically brought into the VAT return once the bookkeeping has been completed. On this right-hand side, you'll see a drop-down, and in here you can see all the VAT reports that you need to have a review of before you submit your VAT return. The first one we're going to take a look at is the VAT detail report. Okay, so that took a minute to load. Normally, this will default to the VAT period that you're going to submit your VAT return for, but like I said a minute ago, because we're using a demo company, it doesn't quite pull through the right period. So I'm just going to change this date, but when you look at yours, you won't have to. As you can see, there's now a list of all the transactions that are going to be included on my VAT return. It includes the VAT rate that has been applied, the VAT amount, and then the net amount as well. So you can have a review through there and make sure that everything that you expected to be there is there and there's nothing that you don't think should be there. So it's always worth having a quick flick through this and making sure it looks reasonable. Then if we go back to the main VAT screen, the next report we'll look at is the VAT exception report. So that's under this drop down and exception. This report will show any transactions that have either been edited or paid that are not dated in the return period that we're looking at. You should always check this report to see if the transactions included are correct. Whether you know why they've been edited or if they've been duplicated, you can get rid of them. You can see on our example, we have no VAT exceptions. Finally, we would also recommend that you review your no VAT transaction report. However, for this one, you need to go to the report section and then search for the no VAT transaction report. If I backdate it a little bit so that I can look at a return that's actually got some figures on it, so it's more worthwhile looking at. So this will show us all the transactions that have been posted to QuickBooks with the no VAT code. So these aren't going on our VAT return anywhere. So we need to review through this and make sure we're happy that the transactions shown here shouldn't be included on the VAT return. So for example, on this one, I can see that this DIY transaction, that was actually a purchase for something I used within my business, so it should go on the VAT return. We've mistakenly put it as no VAT, but it actually should have had 20%. So you can click straight into that transaction like I did just there and just change the VAT amount. There you'll see it's then put the VAT on it. If I save and close that, it will remind me that it's already gone on a VAT return because this is a historic one. And I can say, yes, that's fine. It was wrong. I'm correcting it. You'll then see it's been removed from this no VAT transaction report. And if we were to go back to the VAT detail report, it would then show on there. Okay, so that brings us to the end of our QuickBooks online webinar. We hope you found it useful. As a reminder, it has been recorded and a copy will be sent to you, along with a link to our YouTube channel, which has tutorials on using QuickBooks Online. Finally, we do offer one-on-one training sessions on QuickBooks, so please get in contact with your usual M&A contact if you would like a quote. Finally, does anyone have any questions? Okay, so we've got one question come in. It's, what is the difference between an expense and a bill? So the answer to that is that in QuickBooks, you can expense a transaction where you've bought something at the time of purchase. So you go to the garage, you fill up your vehicle with fuel, you pay for it at that point. On the other hand, if you purchase something and pay it later, you'll then want to enter that transaction into QuickBooks as a bill. So if you went to, so for example, a builder's merchants and you've got a credit account, you can go in there throughout the month, pick up your materials that you need, and they will invoice you throughout the month. But you then won't pay that for maybe another 30 days. So those are the sort of things that you will create a bill for, because you're then going to pay it later. But if you pay for something at the time of your purchase, you're better posting that onto QuickBooks as an expense or as an expense directly through the bank feed. Have we got any more questions?
Okay, so we've got one here. Why does my bank not link to QuickBooks? Okay, so most banks are supported under open banking regulations. So you can connect your account and credit cards for a complete real-time view of all your finances and cash flows. That can be done from the bank page, and it's sort of quite simple and easy to follow. You'll just need your online banking details. If your bank does not support open banking, you can simply manually import the transactions, as I previously showed you in the webinar. Obviously, we've got a copy of the recording coming in, so that's available if you want to look back and check how to do that again.